Hello Sector Watchers, welcome to the show. This is the 182nd episode of Sector Spotlight for Monday the 3rd of July, and I am recording this on Monday the 3rd of July before the open of the US markets. They will actually open in about 15 minutes from now, so it's 3:15 Amsterdam time. My name is Julius Kempenaer and I'm looking forward to presenting another episode of Sector Spotlight to you today. It is the end of the previous month, and instead of waiting until tomorrow, we could do now, because we're on demand, the end of the month of June, looking at the monthly charts, and that's what we're going to do in this show. So we're going to deal with the completed monthly charts for asset classes as well as sectors, and we're going to find a few interesting observations, including two sectors that have moved to new all-time closing highs for the month. That's interesting stuff. Ladies and gentlemen, this is Sector Spotlight. Let's start with a look at the completed monthly charts for some asset classes. So that is monthly charts that ended last Friday on the 30th of June. And the first one I want to deal with is the one for government bonds. This GOVD ETF covers all maturities on the US yield curve. And as you can see, the longer term picture is still very much in play. We dropped below a major support level somewhere midway 2022. We dipped around 2220 and then we rallied, and you can see that that rally never made it back to that breakout level, which keeps the price for GOVD under pressure, and that means that the yields are elevated, at least when you compare it to this period prior to the breakout. And we'll see a little bit more history when we look at that same picture for IEF. And IEF is the 7 to 10 year segment of the yield curve. And here also we see that breakout somewhere mid-2022, and we see how it rallied back to that level where it found a lot of resistance. And here you can see now that we have a little bit more history that that same level around 100 came into play back in at the end of 2008, and again towards the end of 2010, where it served as resistance, and then we broke it, and then it was tested as support a few times. Tested as support again, mid-2022, rallied and then broke, and now we're testing that same level as resistance again. So it's a pretty good example of an old resistance level coming back as support and vice versa. The message here remains the same. The price remains under pressure for these bond ETFs, which means that the yields that are accompanying these prices remain elevated. And in my view, these bond markets, and the fact that they have a lot of trouble getting back above their resistance levels, meaning that yield will be coming down, that's probably the biggest threat to the stock market right now. So these, we got to keep a very close eye on what's happening in the bond markets, because as usual, they will very much help us to understand what's going on in the stock market, or at least make sure you got it in the back of your mind, because these are important markets. The bond market, the bonds are a very important asset class. They're way bigger than stocks, by the way, in terms of market capitalization. Now we go to corporate bonds. That is showing kind of a similar outlook, where we broke and now we're rallying back, and we tested resistance. And here you see that last month was a pretty good month. We ended at the high end of the bar, but on the longer term picture, even corporate bonds are in a breakout mode to the downside, and that means that their upside potential is pretty limited, while the downside risk is pretty severe, as you can see. And the same goes for high yield. That's even more riskier. So government bonds are less risky, and then corporate bonds are a little bit more risky, and then high yield is even riskier. And you can see the same picture. We saw that breakout, we saw the rally, and here you see that high yield bonds were not able to get back to that breakout level, which means that there was more selling pressure coming on. And it basically means that investors in these high yield bonds demand a higher return in order for them to put their money, and that's what this message is telling you. That's what that picture is telling you. So all in all, the bond markets, from government bonds, all government bonds, to 7 to 10 year segment, to corporate bonds, to high yields, they all remain under pressure, and that means that yields remain elevated when you compare that to the recent history. If we move over to commodities, then that is, I mean, it continues. Maybe you remember, I was pretty excited when commodities were able to take out that multi-year resistance back in 21, and then even more so at the beginning of 2022, when they got back above these major lows here. But then they ran into resistance, and it's going downhill ever since. And in the beginning, I thought it was like, oh, this is a little bit of a first decline and a first correction, and then it'll pick up. And then they broke this trend line. It's like, oh, they can go back to this level here, and then they can go back up. And what you see now is that last month was a clear close below that support level, former resistance. And now we're back, like it's 30.57, 30. That's kind of on that dot here. So with commodities, it's getting more and more difficult. They really need to put in a serious low here before they can start, making real progress to the upside. And it's the same when we look at GSG. Similar picture. It's a little bit closer to that old resistance, now support level, but there's not much signs of some form of a low being put into place. So I'm afraid I need to, continue to watch commodities as being under pressure, and we really need to hold this, let's say, 18 level in GSG, and what is it here? Well, preferably above 30, but it could even be 20, 25 and a half, needs to hold in order to keep that long-term bottoming formation in place. But it's becoming a really long-term bottoming formation, because this is now three and a half years ago that we had that low. And if you look at this is more than 10 years. So if this is really a bottoming formation and we do get a price point here, it's going to take a lot of time before commodities get out of these doldrums and really start rallying again. The US dollar, obviously very important. As you can see, we had that massive rally in 2022, and then we dropped sharply back, and here also, and it's beautifully visible on all these monthly charts, because they take away all that daily noise, and you can see how these old resistance levels come back as support. And I've drawn a more solid one here around 100. As you can see, it's got 1, 2, and then here you could argue there's a few closes above it, but the real meat of the resistance is right here. And the same goes for that cluster of highs here at the start of 2022. And then we are now testing that as a support level. And then we've got that high here, which is around 104. These are kind of outliers. These are spikes to the upside that they have been respected, but I do think that the real support is around 100. And for the time being, it has been tested and we're rallying. Not super strongly yet, but we're not breaking lower, and we're gently moving higher. So what are we looking at in the near future? I think that if we can take out that previous month high, so it's 2 months ago now, 104.6, let's say 105, as soon as we get above 105 and 106, that would be very good, and then we could see higher US dollar prices again. For the time being, it remains a little bit shaky, but it looks as if we're holding for now. Bitcoin is a different story. That's been very volatile recently, and this is a log chart, otherwise you would not see anything. But the main level to watch here is around 30,000 US dollars. 30K is a very important level in Bitcoin. I've mentioned that a few times before, and you can see that it's now like 1, 2, 3, 4 months already that we are kind of playing around with that level. So we need a real good break above 30K, and that needs to hold in order to open up further upside for Bitcoin, which could go to, this is 48,000, and then we've got the all-time high here, which is around 66. But keep an eye on 30,000 US dollars for Bitcoin. because I think that is a very important level. On the downside, support comes in around 25K. And with Bitcoin, please take around with a grain of salt. It could easily be a couple of thousand US dollars, because it's that volatile. And then we go to the yield curve. If we take the difference between the 10 and 2-year yields on the US yield curve, we are still very much inverted. More than 1%, more than 100 basis points inverted. I do know that there is a lot of inflation going on, so it's a little bit distorted, this image. But nevertheless, more than a percentage point inversion between 10 and 2-year yields is quite something to pay attention to. How that plays out, how to tie that in with the stock market, this time around is kind of difficult to read. The previous inversions were predecessors to bigger drops, and I think we already had that bigger drop because we started with the inversion right here, and obviously 2023 was a very weak year for stocks. So I'm inclined to say, to make the call that the yield curve inversion has already played its part. It has caused a lot of pressure on stock markets. That caused that decline in 2022, and we're now, in 2023, getting our way out of that doldrum, going back to at least the previous highs, maybe even higher. Nevertheless, that inverted yield curve, still something to keep in the back of your mind, together with, as I said at the start of the show, with the bond market. So the difficulty of the bond markets pushing against resistance, the inversion of the yield curve, it's kind of shaky. It's kind of loose ground as a foundation for rallies in the stock market, which we still see and which are still very much there, and they still look very good. But if there's anything that could throw a spanner in the wheels and in the changes is what's going on in the bond market. Please be aware of that. And then here, finally, we got the comparison between stocks and bonds. So here is the S&P 500 versus IEF. A very clear breakout. There is no reason, there's no excuse now anymore to not prefer stocks over bonds. You got to prefer stocks over bonds. This is a very clear signal that the stock market is doing way better than the bond market at the moment. Now, let's move over to the stock market and equity sectors, stock market sectors. And you may have noticed that I hadn't spoken about the S&P 500 among the asset class section. And the reason for that is that I want to incorporate it, I want to include it in the stock market session when I talk about the sectors, and then the S&P pretty much wraps up all of those sectors. Let's go over the completed monthly charts of each and every individual sector. Let's start with the communications services sector index. And there have been a few people who asked me how I got to my support and resistance levels that I mentioned on that table. We'll look at the table after we've done all the sectors. But I want to answer that question right now so you can maybe follow me better when I talk about these charts. It's a very highly scientific, difficult and complex process of pretty much finding previous highs and lows. That's what it is. So all of you who have asked me how I get to these support and resistance levels, please don't overthink it. It's actually quite simple. I look at previous highs and lows on a monthly chart, preferably almost always horizontal levels, because especially on these longer term charts, when you start drawing angle trend lines, my feeling is that they have less value than the horizontal levels. And these horizontals, these are, especially when they're set on a monthly chart, pretty significant areas of interest. Whether that's resistance or support, doesn't matter. It is something happened at that level. Either sellers outweighed buyers or vice versa. So for me, these levels are important. And the reason that I'm using the indexes here, so not necessarily the ETFs, is the indexes because they represent the purest form of the underlying price action. An ETF is a derivative, and I'm pretty happy using the ETFs for US sectors because they're very liquid and they track their underlying indices very, very closely. That's not the case with all ETFs in the world, by the way, so please be careful with that. Always remember that an ETF is a derivative product, so there's always a possibility that it isn't exactly tracking its underlying value. And also the ETFs are paying dividends, so they're total return type securities. And over time, especially when you look at longer term graphs like we're doing here with the monthly charts, total return can have a distorting effect on the price action. And also these indexes have more history, so that gives me a better opportunity to show you a longer term history on those charts. Let's kick off with communication services. So here's communication services. That trend is up, it was up, and this month, the month of June, we actually continued to move higher after the breakout that we saw in May. So there's no reason to change anything. The support, as I said, a very scientific, complex process, is the previous high here. And then you can see that in that dialog box, it's 205.61. I call that 205. And the same goes for the upside, for the resistance. I'm looking at the most recent high here, or most major. It's a bit of a judgmental thing, but I think that when you watch me going over the charts, you'll figure out how I do it. So here I would say this is 242.90. So for me, that'll be 240 around. You could be 245. That's fine with me. 240. It doesn't make any sense to have like that. There is a bit of a margin in these numbers anyway. So 240 on the upside, and here what was it? 205 on the downside. Trend clearly very much upwards now. We go to consumer discretionary. You can see that is now in an uptrend very clearly. The last time we were below it, so consumer discretionary now moved into an uptrend. And you can see how that previous resistance here at 12.28, so 12.30, has now become support. And the next area we're targeting is 13.75 on the upside as resistance. Clear bottom in place. Consumer discretionary now back into an uptrend. The next one up is consumer staples. And here you can see that it is still sideways. So here I got the little node sideways. You can see how it's moving between the upper and the lower boundary. Lower boundary, 738, 740. And on the upside here, it's around 810. Still pushing against all-time highs, but it's a very defensive sector, and the market is now clearly rotating towards growth and more high beta sectors. They're rotating out of defensive, and consumer staples is definitely one of the sectors that we're rotating out of. The next one is energy, and energy is also in a sideways move. You can see the recent low right here, you can see the recent high right here. We're kind of in that zone, in that sideways range. Previous low where we're still trading below, that was here around 630, 635. And you can see that the close of last month was 623.56, 624. So the bottom here, the lower part of that range is 572.90, say 570, 575 area. Trend for energy now being sideways. If we go to financials, you can also see that's moving sideways. We broke out. There's a very important support level here around 504, 504, 505. Very clearly a serious support level. It was serious resistance. We broke it, and now 1, 2, 3 times we seriously tested it. Last month, financials actually had a pretty good month. We're kind of getting out of, if you look at, we moved above the previous month's high. But still, in the bigger scheme of things, I'd say this is still a sideways move for the financial sector. And then healthcare, another one of the defensive sectors, as you can see, pushing against all-time highs. So it's don't get me wrong, this is not a bad chart. It's actually a pretty good chart. We had that uptrend. We broke out of it, we rallied, we accelerated, and we're still holding above that previous resistance line. That's all very good. The only thing is that there are currently other sectors in this universe that are moving much more rapidly higher, they're much stronger. And if you look at healthcare here, it's at the same level as where it was somewhere mid-2021. So that's 2 years ago. So we haven't done anything in healthcare 2 years long. What we also didn't do was go down as strong as the S&P 500. That's why healthcare was one of the stronger sectors when the market was going down. The healthcare sector actually held up pretty solidly while the market was going down. And right now we're holding up pretty solidly while the market's rallying. So now we're kind of underperforming. Nevertheless, pretty good chart, but sideways and underperforming the S&P 500 at the moment. This, industrials, is probably, most likely, almost surely, the strongest sector in the S&P 500 right now. It is, look at it, look at where it closed. It closed at 908.09, and the high here was 912, and the high here was 909. And I'd say that the cluster here is around 902, 903. So we're above that. Technically, we're not at an all-time high. But we are at a new closing high. When I change this to a solid line and update the chart, you can see that the industrial sector closed at the highest monthly close ever. That is a strong thing. That is a strong sign for the industrial sector. So out of all these sectors, the industrial sector is the one that is closest to breaking out to new all-time highs, and that makes it a potentially very interesting sector for the time being. So please keep an eye on industrial sector, industrial stocks. There could be something nice brewing here when we break out to new all-time highs, because you know that when you break out to new all-time highs, there's always kind of this releasing of a spring power into uncharted territory. Please keep an eye on the industrial sector. It's an important sector at the moment. Information technology, been strong like for a year and a half already. No, a year out of that low here, mid-2022, and we're now pushing against all-time highs. So just like industrials, the information technology sector is also pushing to new all-time highs. And when we do the same here and we make this a solid line, you can see that the technology sector also pushed to a new closing high for the month. That is also a strong sign. It's not an all-time high. We've seen a higher high during the month, which you can see when I put this back to a bar chart. You can see that the high here, the all-time high was 3,113, and the high last month was 3,110. So we're definitely running into resistance, but this is a strong move. If we get a little bit of a pause or a break here, I wouldn't worry me. I mean, it's very normal for after like a 900 point move to see some form of a setback. But then we got a new chance to put in a higher low and break higher. Nevertheless, this is a very clear uptrend on the monthly chart, and it's challenging all-time highs. If we break that, uncharted territory, much more upside potential. We look at materials, not so much. Sideways move. You can see the support area here around 470. In the last 5-6 months, we tested that level 3 times. Last month was pretty good for materials. We closed at the high of the month and well above the previous 2-month high, so that is good. And it looks as if we're on the way to resistance near 540. That's the next resistance level that I'm watching. For now, it's still sideways. Real estate. Real estate is probably the worst sector at the moment in the US sector universe. This is a very clear downtrend, lower highs, lower lows. We had a good month. We closed at the upper end of the bar, but the rhythm of lower highs and lower lows is clearly there. So this is a downtrend, and we need a lot more upward price action for this to change to anything more meaningful, I would say. And here we got utilities, another of the defensive sectors, and as you can see, we're holding up well above that 320 area, which is now a very clear support level. As you can see, like every couple of months we revisit that area just above 320, and it's picked up there as being supportive. On the upside, I'd say we're looking for 373, maybe 360 here. That's the previous 2 months, so 355, 360 could be a resistance level. 370 is the most recent high that really stands out. The trend here is now clearly sideways. And then finally, to wrap it all up, this is the chart of the S&P 500. We're in an uptrend. We were already in an uptrend after we broke above that previous high last month. And now we're taking out that major high here. And to me, this is a pretty bullish sign. We break above that resistance area, so that's 4,300. That is now a solid support level. We should see that as support. And the upside potential is there all the way up to 4,600, 4,500, 4,600. So all in all, stock market had a pretty good outlook, and we just talked about all the charts of the individual sectors. And now we're going to wrap it up in the table as you know it. And let's wrap this all up into the table as you know it that we use here in Sector Spotlight every month when we deal with the monthly charts. If you look at the performances, month-to-month performances of all the sectors were actually showing a positive month-to-month gain. However, they weren't all positive on a relative basis. As you can see, there's actually quite a few that have shown some serious relative underperformance versus the S&P 500. Communication services, that is still a pretty good sector, and I'm not surprised that it is taking a break. But what you can really see very well is the lagging of the defensive sector. So we've got staples, which underperformed 3.6%. We've got healthcare, underperforming 2.3%, and we've got utilities underperforming a whopping 5%. And then the other ones, we've got real estate, which is, as you know, the weakest sector out there, underperforming, and energy is flat, and that's about it. So we got very good months for consumer discretionary, which is a growth sector, which is an offensive sector. We got very good month for industrials, economic sensitive sectors, and then we've got materials 4.3 doing very well, and technology is kind of in line with the S&P 500, so that's where the performances are. If we look at what's happening, so there's no sectors with new all-time highs, no real new intra-month all-time highs, but we have two sectors that have closed at their highest monthly close ever, and that's industrials and technology. That is a very strong sign. And we have now 4 sectors in an uptrend, 1, 2, 3, 4, and the S&P 500. And you know that these percentages here are in terms of market capitalization. So it adds up. So when there is a positive check mark here, it adds up the weight of the sectors, and that's now 53%. Only 2.6%, that's the real estate sector, is still in a downtrend. All the others are in a neutral sideways trend. And as you've seen when we went over the charts, there's quite a few that are very close to breaking out to the upside. And every break to the upside pretty much makes a tick to the upside in the uptrend bar. So I expect, if all of this continues and if that strength that we're currently seeing continues, I wouldn't be surprised if we see more sectors going back into monthly uptrends, and I wouldn't be surprised if we start seeing some positive checkboxes in the all-time highs and more checkboxes in the new closing term highs. These are the two new ones here, and you can see that these are where I had the border around the numbers. That's where the support and resistance levels, as I did them using my highly sophisticated, scientific, complex way of finding support and resistance. I hope you get the gist of it right now. It's not all that difficult. It's not all that complicated. Sometimes you really need to keep things a lot more simple, because the human brain, when it comes to remembering levels and getting into action based on price, isn't all that sophisticated. Sometimes it comes down to very, very simple processes. And that's what I'm using. I'm a simple guy. So here you go. So the new support and resistance levels. This will calculate the downside risk using the current price level to the support area, and the upside potential is using the current price to the resistance level. That's about it. And that wraps up Sector Spotlight for this week. The first Sector Spotlight doing monthly charts right after they closed. Thank you for watching, and Sector Spotlight is now available on demand on the StockCharts.com YouTube channel. And I'll attempt to upload a new episode of Sector Spotlight at the beginning of each week, aiming for Mondays. You're still welcome to share your thoughts, ideas, and or comments under the videos or on any of the social media handles that you can see on the screen. Thank you for watching, and I'm looking forward to seeing you again next week, same time, same place.